let's just press on, Mark. We have no hands. We have no questions at the moment.
Okay. Well, we're down to the last 5 or 10 minutes, and I'll be able to fit in. We're actually at the point in the program where think back to the Romans and the gladiator times where the other three guys have gone and the lions have not been out there for a long time, but it's been a long time since they've been fed. So you throw Mark in as the last gladiator, and he has to face the lions when they're hungry. No fun at all, right? Well, I'm actually going to pick a little bit more controversial selection this month. STRA Education, that company, is no stranger to any of us, but I'm going to do it with the disclaimer that we are playing with what many of us would recognize as a falling knife, hence the sign on the left. And just to give the whole scenario a nutshell, the entire educational services sub-industry for that virtually all the companies that we follow have come under fire in the last couple of months, specifically towards the end of July and then again in the middle of August. And many of those companies are down significantly. Now, one of the things that we have counseled since the beginning of that turmoil is that you watch, all of us watch, and in fact, this is just we were just talking about a few minutes ago. In fact, some of the numbers are changing, and the analyst estimates, we're running into a lot of NAs. That's what the people were talking about. Here, what I've done is pulled up American public education, and one of the things I want to point out to the audience is even when these are NA up at the top, you can go down here and grab from just 7 days ago that $1.50 and the $1.84 estimate, which is current enough for most of our purposes. But the thing we want to take a look at is in the case of American public education, we've been counseling to watch for the specific impact. The analysts that follow this company, and you can see there are 14 of them, the 14 of them have quantified the impact from this repayment characteristic that they're enforcing on the professional education schools that is projected to either damage their growth prospects or their profitability prospects going forward. And you can see there's actually been impact over the last 30 to 60 days in the case of American public education. So we want to take a closer look at that actual aspect. And what I'd like to do is focus in on manifest investing. If you take any company and pull up the company report, which we refer to as the fundamental forecasts, and you click on the industry that's shown on that page, you pull up what we refer to as an instant industry study, or certainly a snapshot of industry characteristics. And in this case, I've pulled up educational services, and I've sorted it by quality descending, because I want to focus in on the excellent companies, by virtue of their quality rating at Manifest, and perhaps a few of the goods. And then also, we notice even though some of these companies have had some of their forecasts and judgments scaled back in recent days, the prices have plummeted for many of them. We still have a condition where a great many of them are still at projected annual returns more than 10 percentage points higher than the stock market. So that's why they're color-coded in yellow, and just what we've always counseled you to believe, that those could be too good to be true, and that there could be other things that are unaccounted for. One of the things that I have been pointing out in some of the educational sessions that we've given around the country is that for the longest time I've been concerned that the PEs just in general have been a little bit high for this entire industry group. And I think one of the things that we're going to see going forward is certainly a compression of some of those PEs. Even in the case of a company like STRA, it was up in the 28 to 30 range for their longer-term expectations as recently as a few weeks ago. And now we're starting to see numbers down into the mid-20s, perhaps even low 20s going forward. But we're going to focus in on just these at the very top, the good and excellent quality companies. And what I've done here is I want to take a look at, how are the rhinos treating these companies? And again, we refer to rhinos as the institutions and the Wall Street analysts. And I've listed the companies. You can see the elevated pars here. But what we're doing is we're taking a look at the long-term earnings per share forecast from roughly 60 days ago, and taking a look at what is that forecast now. And in the case of STRA, you can see that the forecast, even with all this stuff that's going on, has actually ratcheted up a little bit from 1182 to 1207. That's an actual increase in forecast for the 2011, perhaps 2012 forecast for a bunch of these companies. The one exception to all of this chaos is New Oriental Education. That's a Chinese educational services company, and I suppose they're the only ones that are truly immune from the Senator Harkin harangue that's affecting all of these companies. But to just take a look at how these forecasts have changed for some of these companies. In the case of American Public Education, then that's a pretty good hit. And there's some other hits here that are not quite as bad. You can see that one of our community favorites, ITT Educational, hasn't been too bad. But now jump over here to the far right and see how has the price changed since July 30th. And I think you see a fairly fascinating pattern here where they've all been hammered 30 to 40%, with the exception of the Chinese company and Apollo Education, which, by the way, made that all back in basically a couple days over the last few days. They were down pretty heavy too, but they have come back. And what's kind of fascinating about it is some of the more concrete allegations were made against companies like Apollo. Go figure. So in this case, I'm basically making the case that they're all down pretty hard. Some of them deserve to be affected by what's going on, but in the case of STRA, you basically have a situation where the forecast has not been impaired, at least not yet. Yet the price is down 40%. So let's take a quick look at STRA. There you see definitely up, straight, and parallel. That's one of our favorites. The reminder that it's still a relatively small company, 2 years from now projected to be still short of 800 million in sales. And then we also notice that at the current price, somewhere around the $150 or $160 range, we're actually fairly close to the long-term trend here, suggesting a potential buying opportunity. Here's just the opposite condition when it was $200 a share back in 2007. You can see that the distance here is quite large. So again, less likely to be a buying opportunity here, more likely to be a buying opportunity here. And again, the shaded region is just our reminder that some of us like to include a couple years of analyst estimates in our trend formation. Here's the profitability profile. Again, this is our management report card, and we notice that STRA has an exceptional profitability characteristic. The net margins are simply somewhere in that 20% range. And again, I look at the company, I listen to what they're saying, how they're responding to the crisis, and a lot of the stuff I'm hearing gives me comfort. These guys are good at what they do. They currently only exist in, I believe, 16 or 19 states with a decent potential for geographic expansion. It's been a well-managed company for years, and good to have them at the helm. Here's a look at the PE over the last 10 years. I'm using bigcharts.com for this, as you can see right here. I'm displaying the PE ratio instead of the volume here, just so we can take a look at what it's been over time. And you can see that as the company has grown and gone from a smaller company to a more of a medium-sized company, the PE is maturing and declining. The recent year, the current year, suggests a PE somewhere closer to the 20 range. And I'd also like to suggest that for those of you that do follow price chart characteristics, that's a very strong support base there, somewhere just a little bit less than $150 a share. We'll talk more about that in a minute. Here's a quick look at the company using our equity analysis guided manifest and our 3 core assumptions of take the company in the current situation, roughly a $600 million company. If they do grow at 18%, again, that's down from what it was, just a few years ago. If they do manage to achieve 20% net margins, and oh, by the way, they're at 20.7 now, and we just saw the management report card look pretty strong. A little bit of an increase in shares outstanding, but we're looking at an earnings per share estimate of about between $18 and $19 for our 5-year EPS forecast. With a PE in the 20 range, that would deliver a stock price of $3.72. They actually do pay a dividend, and we're looking at a company, even with slightly curtailed expectations here, in the 19, certainly the upper teens make some sense here. How do the analysts feel about the company? They currently still do have a $12 estimate for year-end 2011, and they still do have a median earnings per share growth rate of over 20%. So they're saying that earnings could be as much as $24. So we're actually coming in a little bit under it. I'm more comfortable with this number than I would be with this number down here. So again, it's a company that I would see as extremely high quality company based on the visual analysis, and the projected return is somewhere in the upper teens, approaching 20%. Now, one of the things that you can do if you follow technical analysis at all is it can help with falling knives. In this case, here's another look at the price chart. only in this case we're concentrating in on also taking a look at the relative strength index. That's what RSI stands for here over at stockcharts.com. This is a free service. But here you can see that that price did drop down on 3 different occasions into that 145-ish range. So again, that's a very strong support level. If it drops below that, I would have great cause for concern. But in this case, we see a situation where the relative strength index suggested that at $266 a share, it was potentially overbought, and probably a potential selling candidate here. Just the opposite is true down here. The relative strength index is down below 30, probably near a bottom. And again, unless you have a tax-motivated selling reason, I'd be, if I was a holder of the stock, I would definitely hold on and evaluate accumulation of the company. That's why I've suggested that we add it to the round table. So with that, we'll go ahead and open up the floor. I just wanted to make sure everybody knew that the tracking portfolio is available at any time at that public link, and that shows the 8 selections to date right now, along with our wild hog friends there. But let's go ahead and open up the floor for any questions. We are right at 10 o'clock. Those of you that want to run off and do other things, fine. We will hang out here for the next 10, 15, 20 minutes and answer any questions that any of you may have. So go ahead, Mr. Kabula.
Mark, Dan Hess makes the point that if Yahoo is not providing earnings estimates, if there seems to be a problem with the Yahoo site, you can get roughly the same information from the MSN.com site. So he's just giving us another alternate site.
Yeah, good point. And I know people use the NASDAQ.com site, and then also for just earnings estimates, you can use Morningstar.com. So there's a couple other places to turn for earnings estimates. I don't know, Dan, does MSN.com include sales or revenue estimates? Is he unmuted, Ken?
This was a written comment. I will try to unmute Dan. Dan, you're unmuted, but I don't know if you have a mic or not.
Can you hear me?
Yes, we can, Dan.
A Tar Heel coming to life down there.
I think the answer is yes, but I'd have to double check it.
Okay. Yeah, I think I may have seen it in there too.
I've noticed Yahoo does provide the sales information, even though they don't provide their earnings. And you can get the earnings from MSN.com. I think it comes from roughly the same set of analysts.
And Reuters.com also provides that, and they do have the sales figures as well as earnings.
A couple of different places to turn. We just like the Yahoo because it's so convenient, and everybody's used to using it.
Cy, we have a question from Kim Potter of the BI Brighton Model Club. She'd like to know which where do you use for your sector information? Which setup, which set of sector definitions do you use?
I use originally calling it technology, I believe, based on the manifest sector definition, but I personally use, and I believe we're pretty much still using at manifest as well, the S&P sector definitions. I understand Morningstar is revamping theirs, and there may be some changes in the future to Morningstar by, for example, the data file, the NAIC Better Investing data files. I have not personally started using Morningstar just because I don't exactly like the way that they classify the I guess it's the services sector. Anyway, I'm just more familiar with the S&P, and that's what I use right now.
Yeah, I can add a little bit of information to that, Cy. Sometime in the next 2 or 3 months, Morningstar will be rolling out a completely new classification system. It'll be just about the same time that our data system, our data feed, goes from Standard.mp4's data to Morningstar data. If you're subscribed right now to the Better Investing data feed, starting sometime at the end of December or beginning of January, you will be getting Morningstar data. We've gotten an advance to the new Morningstar system, and they're going to base it on the basic 10 sectors that match the S&P, but they are going to add an 11th sector for REITs, for real estate investment trusts. They don't feel that those fit in any of the sectors, so they're adding an 11th sector for real estate. But other than that, the other 10 sectors will still be there, and will still contain roughly the same kind of stocks as we see right now in the Standard & Poor's system.